This episode of My Two Satoshis is brought to you by Volume.io. Volume is a multi-sector enterprise and B2B platform which allows companies to rapidly scale and grow internationally by leveraging all the power provided by blockchain technology. Through their highly rigorous vetting process, only the highest quality companies are allowed. With Volume blockchain platform, companies can track, route, identify, and source all of the activity that happens on their supply chain. Visit Volume.io for details. Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is May 3rd, 2019, and I gotta give a shout out to Tyler D out there on YouTube. His song pick for today was Dead Prez Propaganda. Thanks for that song request, Tyler D. Hope you guys doing well today. It is Friday. Yes, finally, the weekend is here, people. What's good? Welcome to another episode. And today we're going to look at Bitcoin is going crazy. It's actually up over 15.5% in a month, up like almost 5% today. We'll take a look at that here in a second. The whole Tether thing, Tether Bitfinex thing gets even more interesting. It looks like one of the Minnesota Vikings investors, an Arizona businessman, is caught up in this whole scandal with Tether and Bitfinex. U.S. government is trying to get him apprehended. He's a flight risk, they say. We'll take a look at the details. He's got like $345 million all spread around the world in different banks. It definitely caught my attention. So that's one of the articles. And then also we're going to look at this Got Satoshi website that's popped up out of nowhere, really. Is it a PR stunt or is it something real? They've got a countdown saying that they're going to reveal who Satoshi Nakamoto is. And then lastly, there are new findings out that proof of stake cryptocurrencies may leave you heavily taxed. So we'll take a look at this angle and see what you guys think about this. But first, let's check out this heat map. The global market cap for cryptos, I think, is around 184 billion at the time of recording. Look at that. Bitcoin up 5.5%. On some exchanges, at least one, Bitfinex, and they're trading at a slight premium. It cracked 6,000. However, for most of the other exchanges, I think the high we got was 5,800. So I told you guys that after we did breach that level of like 5,400, that I thought 6K would be the next move. So I'm still waiting for the majority of the other exchanges to test that 6K area, and then I think we'll get a pullback. EOS is up 7% today, along with Bitcoin Cash up 8% today. So huge gains. Litecoin up 7.5% as well. ETH up only 4.5%. So big moves in the markets today. So let's take a look at the quick article of the day. Just a quick review of it out of CCN, and it's about this new website that just launched this countdown saying that they will be unveiling Bitcoin Creator. It says here a new website is making the rounds on the social web, stoking speculation about what it could mean for the mystery of Satoshi Nakamoto. The website is gotsatoshi.com, launched around this past weekend with no hint as to who built the site or what it is for. The only clues are a ticking clock and promise of a live unveiling. Is this a hoax, or is this an epic unmasking? Or is this an epic PR is what I would say. PR stunt, I think, is the latter. So you guys can check this site out, gotsatoshi.com. In 10 days, 21 hours, 4 minutes, and 30 seconds. I guess you'll be able to know who Satoshi is. It says, where in the world is Satoshi? San Diego is what I added to the end of that. Man, I don't know what is going to happen on this site, but definitely if you guys are interested, bookmark it, gotoshi.com. I'll try to put a reminder to check the site out in about 11 days. On to the first article, though, out of Decrypt Media. It says here, the strange case against crypto capital connected Reginald Fowler. It says here, an investor in the Minnesota Vikings, the Arizona businessman, was trying to finance a new U.S. football league, but the feds say he was a mastermind in a vast money laundering operation at the heart of the crypto industry. It says, according to the feds, he has access to over $350 million. His money is stashed in dozens of banks all over the world. He was printing up sheets of counterfeit $100 notes. He has links to a vast global conspiracy involving cryptocurrency firms Tether and Bitfinex, and the U.S. government says he's a flight risk. And a Sports Illustrated report would seem to confirm parts of it. The magazine details Fowler's role in the launch and spectacular crash of a new football league, the Alliance of American Football. The Alliance of American Football, which was tied to the alleged money laundering operation. Federal prosecutors charged Fowler, along with fugitive Ravid Youssef of Israel, with bank fraud and the running of an unlicensed money transmitting business on April 30th. U.S. Attorney for South District of New York asserts that they, too, were part of a scheme to help process millions of dollars on behalf of an intentionally scattered group of cryptocurrency exchanges unable to gain access to traditional banks. Yesterday, in a new filing, Fowler was described as a serious flight risk. The chief danger: he allegedly has access to millions of dollars worth of funds held by the exchanges that his business has allegedly and illegally serviced. Indeed, he has access to a remarkable sum. If the Attorney General's estimations are correct, Fowler and Youssef held a balance of some $345 million across some 60 bank accounts opened under a variety of names, including Global Trading Solutions, LLC. The name ring a bell? Global Trading Solutions was reportedly a burner bank account set up by Crypto Capital Corp., the murky payment processor embroiled in another New York Attorney General investigation. Last Friday, the attorney's office alleged that Crypto Capital was partly responsible for travails at crypto companies Tether and Bitfinex, which were accused of having covered up a $850 million hole in Tether's finances. And the New York Attorney General alleges Crypto Capital held the funds. So according to the most recent filing, Fowler has shown an alarming willingness to help himself to his clients' bank balances in the past. In mid-2018, the filings alleges Fowler sent $60 million from bank accounts set up on behalf of his clients to his own personal bank accounts. Like, I don't understand how people do this type of stuff, them not knowing. They play this game. They know that over X amount of dollars, especially on the corporate side, I mean, it's definitely higher. But even on that side, if you transfer $1 million, $2 million, they're doing their checks. They have their risk departments for each of these banks, the receiving and sending banks. So I don't understand how these people think they can get away with transferring amounts like 60 million to personal bank accounts without any explanation. I will have to say that being done, he has to have some banks in collusion with him to do this, though, because for them to just allow it, there's definitely some shady stuff going on in the bank as well without a proper audit trail. At other points, he is described as having commingled clients' funds with his own as part of the so-called 10% fund described in the Master U.S. Workbook obtained by the prosecutors, which detailed his operation. The following also describes Fowler as having kept a large portion of his allegedly counterfeit wealth in cold, hard cash in a literal filing cabinet. Wow. Says FBI agents also recovered approximately $14,000 in counterfeit money at defendant's office. Counterfeit currency consists of sheets of $100 bills that were found in a filing cabinet in an office. This seems like a strange thing for a man who was almost drafted by the Cincinnati Bengals to be involved with this. This definitely spices up the whole narrative, and it really kind of validates what Bitfinex / Tether is going through. Doesn't mean that they're not in trouble financially, but what I'm saying is it shows that the cover-up was due to another person or entity's criminal activities. So yes, they did lose $850 million, and was trying to, and actually did cover a decent amount of it, but man, I don't know if they'll be able to get that money back. That's the issue. So if they're not able to get that money back, meaning Bitfinex and Tether, they're going to have to work hard and run a very efficient operation for the next couple of years to kind of cover that shortfall, as long as the public, the crypto public, doesn't lose confidence in their exchange operation. If they continue to do what they are supposed to do, then that won't be a problem. But man, this is crazy. You guys let me know your thoughts about that. Looks like this guy is actually behind it, and this crypto capital firm is tied up into some heavily illegal activities there. No wonder Bitfinex funds were missing, because they were commingling all types of funds and doing all types of stuff. So hey, this is going to definitely continue to develop, and we'll see where it goes from here. And I understand now why Bitfinex was so mad at the New York Attorney General's office, because they should be helping them, not trying to press Bitfinex. They know all this information. They're going to dig and paint crypto in a certain light. Next article is about being burned at the stake. It says why PoS cryptocurrencies may leave you feeling taxed. PoS meaning proof of stake currencies. And so we're going to take a look at the attraction of proof of stake and its fallacies. It says here, BitGo and Beluga co-founder Ben Davenport has just published a report examining the effect of taxes on PoS tokens. He makes stark conclusions regarding the tax man's impact on potential returns from the coin. One of the key attractions to PoS coins is the opportunity to stake your holdings and earn an annual reward of between 5 and 15%. But as Davenport writes, there is only one place that this money can come from: people who don't stake their coins. So if you hold one of these coins, it is your best interest to stake. Otherwise, your share will get consistently diluted. Of course, if all holders stake all their coins, then everyone maintains the same overall share. Therefore, with PoS, you have to stake your coins just to break even. But it says here that the tax man makes it even worse. So despite needing to get the staking rewards simply to not lose out financially, many tax agencies still consider any yield as income. One could debate whether these are taxable or are simply analogous to stock dividends of shareholders. However, the fundamental difference goes back to the rewards only being paid for staking, meaning that work is being done to receive them. So you have to stake to receive the rewards just to break even, and then the tax man will take extra money off of you for pleasure. So Davenport outlines an interesting thought experiment pondering the consequences of the tax authority accepting payment in the PoS coin. It assumes a 10% annual return, 35% tax rate, and that all holders are staking 100% of their coins. It also assumes that the tax authority was a committed holder who never sells. It says the tax authority share continues to increase, and after 22 years, it owns over half of the market cap. Of course, in reality, the tax authority doesn't accept the token as payment, so holders need to find new buyers, leading to downward pressure on the price. So when tax is considered, proof of stake coins can actually lead to negative returns in real terms. So for those of you who play by the rules and give over your hard-earned cryptos to the tax man, you definitely want to check out the ramifications of PoS coins in your portfolio. I'm not staking too many coins. I stake a little EOS, but this article definitely has me second guessing how I'll do that going forward and what the tax liabilities may look like for me. So I need to look into this, and I thought you guys may be interested. This article has a link to the actual published report, so if you want to look at it in detail, feel free to do that. And do you have any PoS tokens? If so, are you staking them? And have you even thought about tax events on that staking event? I never thought about it. So this was interesting. I thought it may be something you guys would be interested in too. But that's pretty much it for today, ladies and gents. Make sure you guys like, share, and subscribe. Shout out to my man Tyler D again for that song request, Dead Prez Propaganda. And that's it, people. It's my 2 Satoshis for May 3rd, 2019. This year is going by fast, man. I can't believe it. I'm out of here, people. Holla!